What's going on, guys? Going to do another trade recap on the SPX. So I did take 3 contracts of SPX early in the morning. Again, never going to catch the whole move. Not only did it go, but it absolutely exploded. So I'm going to kind of walk through and show you guys what exactly I was looking at. I did put the level in my Discord. The level that I was looking at was 38.75 to the long side. So we can see here, as soon as the market opened, we did have a nice push higher, followed by this little wick candle that kind of briefly took out the opening range highs, wicked higher, and then we pulled back for 10 minutes. This green line that you're looking at here on the screen is the 5-day moving average, okay? So we pulled right into this 5-day moving average, which is also correlating with the 150-day simple moving average on the 5-minute time frame. Now, what I was looking at was if SPX could take out these highs, and this is when I exactly put this alert in. As we were pulling back, I put this alert for 38.75 long. So watch this. If it was able to take out the opening range break, the opening range highs, whatever you like to call it, definitely worth a cash flow move. Being that you don't need to get a lot of points off of the SPX in order for it to move in your favor and actually profit a decent clip, you don't need to really catch the whole move. Now, if you can manage to hold on through a lot of emotions and hold on through, a lot of the intra, minute ups and downs, then you can definitely make a very good clip trading the SPX. So with that being said, as soon as it started to break 38.75, I went ahead and went 3 contracts long here, and I sold out of 2 on this very first candle. So within a matter of 2 to 3 minutes, I was already selling out of my contract. Now you may be thinking, why would you sell out of your contract when this ran another 25-30 points? Good question, because if I would have held, it would have been multiple thousands of dollars worth of profit. But one thing that I do want everyone who is listening and watching this video to kind of take away: we never know where stocks are going to stop. Okay, so if I go into a trade with the mentality of I'm going to make 20, 30, 40 points on the SPX, and let's say I have 5 points, right? For example, let's say, for example, I was up decently amount here, was expecting this to happen, and all of a sudden on this candle 10 minutes later, this not only pulls back, but then drops back down to a lower level of support. Not only will I give away my gains, but now I will be down on my position very significantly. So that's the art and the mastery of trading and managing your emotions and expectations, being realistic. So the point that I'm trying to make is that, yes, even though this did go 20, 35 points, even though, yes, there are traders who do technically hold through this, for me, my style of trading, I like to get in with sufficient size that is comfortable for me. And if the move goes in my favor extremely quickly, I like to take those first profits off the table. So when I took those first profits off the table, it was about $1,000 worth of profits that I took off that table. Now, depending on your account size and depending on what your overall goals are or what your overall objective is with trading, $1,000 trade and $1,000 day in a matter of less than 5 minutes is a fantastic day. So my realistic, what I'm looking at each and every single day is, now mind you, I'm not always going to make $1,000 on a trade in less than 5 minutes, but realistically, if I can come in and identify a technical setup and that move goes in my favor extremely quickly, I always am going to lock in those first bit of profits. I will hold the runner and tend to sell out 2 to 3 pushes higher. What does that mean? 2 to 3 candles higher than my original push point. So if my entry is here over this white line, 38.75, I did take 38.70 contracts. That was the strike price. I went in the money on these. So in case it did go in my favor, I knew that I was going to be profiting very quickly. One of the other reasons why I was comfortable taking this trade, if you can see all of these lines here, these are all supply and demand zones here. We were above everything. A lot of open, empty space here. This is always a good thing for me. You can see the next colored line that we have on my screen here is a level of supply. This is a linear regression channel 50. We came almost up to this area, kind of tested this area, and then you know, kind of pulled back and consolidated. So as we got this push higher, I immediately sold those 2 contracts, and I was looking for 2 to 3 pushes higher. Next candle opens up, quickly breaks the highs, and then pulls right back. However, this does not shake me out of my position on my runner, just due to the fact that we did not close below this level of support. This level of support that I'm looking at is the 5-minute 5-day moving average. We broke below, however, quickly wicked back over. And when we wicked back over, not only did we close above it, but the next candle pushed even higher. So it was on this candle, as we took out the new high of day, is where I sold my remaining runner contract. Now, obviously, just looking at the chart after the fact, it's easy to say, well, why didn't you hold on for all of this? Because at the time, you never can expect that the move is just going to continue to ride higher all day. You understand where the potential is that it can stop, which is up here. However, if you as a trader are comfortable with the gains, now this is where things get complicated. Where are you comfortable for the gains? The people who want to see 100, 200, 1,000% gainers, those people who want to see those moves move in their favor all day, are the traders who generally, yes, have some big wins, but give it all back on one trade. That's not what my business is. I'm looking to come into the markets each and every single day, make consistent and profitable small wins, and continue to stack those each and every single day. Now, I do this full time. This trade did net me $22,240, 2240, 3 contracts, and I was in this trade for a matter of, if we just kind of count the 5-minute candlesticks, 5, 10, 15, 20 minutes. 2240 in 15 minutes is not a bad day. Now, yes, could I have 2, 3, 4x this trade? Absolutely, but obviously I do not just trade the SPX. I was in and out of other plays around the same time as well. So those trades kind of add up and compensate for what you may miss out if the move does continue to go in your favor. Now, the only thing differently that I could have done was just tell myself, if this continues to stay over the 5 SMA, which is my shortest term support, hold the trade. If that was the scenario, then yes, technically, this candle here at 8:15 a.m. would have been my stop out candle, and that price would have been 3,900. So from an entry price of 3,875 to 3,900, you can kind of do the math and see how many points you would have grabbed off of that. But technically, that would have been your stop to get out once it closes below the 5 SMA. Guys, I hope this video helps. If you guys want to trade with me each and every single day live, definitely join the Discord, become a lifetime member to the Evolution Traders, so you guys can get access to my strategy and how I'm finding these stocks, what I'm looking for, the psychology, everything that goes along with trading. All that information can be found. Now, you may be thinking to yourself, what if I can't afford to trade the SPX? Guys, SPX is the SPY. You could trade SPY contracts. If we kind of just look at what's going on here, same time frame here. I also had the levels drawn out here for the guys in Discord. You can see we kind of broke through that level pre-market. What we would be looking for here is the opening range high break, right? The first 5, 10, 15 minute candles here. What is the high of day? The high of day would have been 386.50. This engulfing green candle bar here would have broken that high of day. This would have been your entry here at 6:55 a.m. Pacific Standard Time. And not only did it go from a price of 386.50, but a price all the way up to 389.90, which you can see, where did we stop, guys? We stopped right here. So a lot of you guys who look at this chart and say that this chart is confusing, this chart with all these lines is going to tell you where stocks are going to potentially stop, where potentially they couldn't go. So what am I trying to say by that? As soon as we get over all of these levels of supply, all of these levels, and we start to clear it out and start to build, well, if we have nothing but open airspace, well, you can kind of see where this stock is going to stop, and where it stopped, it pulled back. And where did it pull back? To levels of demand. I hope that video helps, and I'll see you guys all in the Discord.